Good morning. Good morning, everybody. I'm Bagadon at Stock Market Caddy, and today is Wednesday, August 13th, and all the markets are up. They're up again. They're up again. They're never coming down. Um, we stayed with the HFT2 last night. We didn't have much of any orders. We had a little $98. So that's our performance for the week. So it hasn't done a whole lot, but the market's been straight up. So one of the things that we've done here with this strategy is we have quickened the pace of it. Now it's not going to be really quick, right? It's going to be quicker than it was, but it's only going to play the market that it has, right? So we're going to see how we do. We'll let you watch. In the meantime, let's take a peek at Swing Machine. The VIX 5-minute. The last signal was a short at 10:25 yesterday. Yesterday. I mean, there is no concern at all in the markets for anything, anyone. Everybody is a genius. When the markets hit highs, new highs, anybody and everybody, including all the dead people, are geniuses because whoever bought the S&P or the Nasdaq, they're all got it right. So it kind of breeds a complacency. Um, we're going to take a look at that in a moment or two. But let's take a look today. At 2:40 a.m., Europe says, "Hey, we're getting on this bandwagon." They go along. ES, $1,300. 2:35. Now we're going to get in that Nasdaq too, man. That's automatic printing money there. So they get in, they get involved. Here's the Dow. Well, we're going to do that too. 3 o'clock. This is Europe coming in. And then here's the Russell, 325. Now the American hedge funds, they open at 4. The American public, they get involved, around 9:30, a little bit late. But that's what's happening. Gold is catching a little bit of a bid. Silver's catching a little bit of a bid. Let's look at the daily. Let's get this daily up because doesn't happen very often. Look where the daily VIX is. Daily. Almost in panic zone. Can it go lower? It can, but this speaks to the complacency, right? Now let's look at the ES. Where is it on a daily? 90. Okay. So at this level, I'm not telling anybody what to do with their money. I'm not. But the VIX may get into panic today, and the market may get into euphoria, and they may even go a little bit higher, right? But what we know, is we can even take a look at the skew. Is the probability that they stay there is very, very low. The probability of them coming back toward the mean is very, very high. So, depending upon what one has, if one has money in the market, you might think about trimming it. You might think about taking half out. You might think about selling calls. You want to bank that money. If you are an aggressive trader, you got to be thinking about going the other way. And you got to use options. And you got to know your way around the options. And you got to get yourself plenty of time. And you got to use the right instrument, when you use the options. Let's look at the NASDAQ. NASDAQ is in euphoria. Absolutely in there, I think, on a daily. Yeah, no, it's a little there. But so we shall see. I'm going to put these back. I'm going to put these back to a 5-minute. And let me show you skew. What is skew? Let me see here. Let me put it right in here. It is $SKEW.X. Now, it doesn't move during the given day. And so I'm going to put that on a daily. It's posted from the day before, right? It doesn't move intraday. Skew is at 151 and pushing higher, right? Pushing higher. What pushes skew higher? when the billionaire class, when they, um, hey Teddy, when they own the shares that they own, when they start seeing this froth, their machines start reacting. And what their machines start doing is to sell calls to the speculators who are buying calls, right? Going long, leverage, piling in. And then they will take a portion of that money and they'll start buying themselves some protection to the downside, puts. And that drives the skew higher. So when we have a market that we have approaching euphoria, when we have the VIX pushing into panic sell, and we have skew pushing higher, we know that this is not going to be long lived, right? But this skew is not a great timing tool, though. It isn't. It can just tell us the general flavor. So it is what it is. And you get to define, as traders, you get to define what you trade, when you trade, how far you trade, right? And you may be I don't want to use the word bearish, but you may be thinking reversion to mean, over the next 40 days. But intraday, you might be going long, right? Which is a fine position to do, right? You can do that. You can be both long and short, just like a hedge fund. You might be putting on puts on the S&P or call credit spreads on the S&P, and at the same time, which would be a bearish perspective, but intraday, just taking the longs, kind of hedging yourself as you go. You certainly can do that. Also, too, let's look at the dollar sign. Let's look at the SPX. Dollar sign SPX. Oops. And yeah, see, this is the S&P cash. We're at 64.79, 64.80. This bitch has been long for 70 days. 70 days. And look where that thing is. Now you say, Don, that thing's only up $828. Well, let me explain. The S&P cash, you can't trade other than using options. So what that means here is it's a point. It's delivered, Swing Machine has delivered 828 points. 14.66%. That's 70 days ago. 40 days ago, let's just go 40 days ago. If you had bought a call option on the S&P and said, hey, I'm going to go, okay, sorry about that. So, even if you got 40 points and you had a call option on the S&P, now that would have cost you, it probably would cost you 6 or 7 grand, but it would have paid 40 grand. This one here, if you had bought a call option out, let's say 90 days, 3 months, that call option would have been expensive. It would have cost you, somewhere be probably 10, 15 grand, but you'd have 82 grand. At least, close to probably 90 grand. Really staggering. When it does this, I know, I know what you're thinking. It's never coming back. I know that. Everyone thinks that. They also think when the VIX when it gets reversed and the VIX is high and the market's selling off, it's the end of the world. And I'm like, no, she'll bounce. But this one's a little bit more, on the high side, it's always a little more persistent. They can stay pretty irrational. And it's greed. It's absolute greed. They just can't stand it. And there'll be people who didn't buy the S&P over the last 70 days, and they'll be buying it now. And some of those, unfortunately, may be, shorts that are just got a little bit over their skis, a little bit premature, or can be any variation of it. And these include hedge funds too, by the way, right? They're traders too. I mean, they get them wrong too. And if there's a hedge fund out there that knows there's a hedge fund in trouble, then they'll pound the hell out of them. They absolutely will. All right, so let's put this back to the VIX at VX. And we'll put this back to a 5. And our program is running. It is running, so we're going to let you watch. And we'll see if we can work this off and get profitable. We don't get it all. We're not trying to get it all. Just trying to get our share. So we'll let you watch. We're not profitable every single day or even every single week. Unusual if we're not, but on the weekly basis. But we still got plenty of time. At this juncture on the CME challenge, I haven't opened it. There's a couple of quirks to the CME challenge. One of which was I couldn't get into the platform, and I just can't be dealing with that. And it was actually yesterday morning. So then what happens is they don't margin call on the CME challenge. They don't. If I margin call myself, there's a trade, right? So this trading is going to be, we've said here, we've sped it up the pace. I've changed the settings to increase the pace of play. So we're going to get more trades in. Let's see how we do. This is all being run by the machine. I think we'll do okay. So, that's one of the other quirks, right? So if I margin call myself and come out of the position, then I got less capital to even work with, and the folks that are out there, as they increase their capital, they're using even more leverage than where the game actually started too. So it encourages extreme risk taking, and it's got some quirks to it. So we'll see if this market. I still think this bitch is overdue, right? Is it going to be today? One never knows. When we look at this right now, we can see the VIX is ripping, meaning they are starting to buy it. So they are starting to come up. So there is a little hint that the futures players think that the option players are going to get defensive. That's what is the thought. The ES we're getting just a dip, and the NQ on the 1 minute right here, right now, is getting short. Even though we're not trading this, we like to keep eyes on it. Another situation's developing. We've seen this before. Two stocks, Microsoft and Nvidia, account for 15% of the S&P market cap. Two stocks. Okay. And they are the most owned. I think it's now approaching nearly 10% of American retirement money is in Nvidia. Nvidia has earnings, I think, on the 26th or the 27th. They can be a great company. They can have a great future. But any kind of disappointment, any kind of stumble, any kind of slowdown, that money's going to come out of there so fast. We've seen it in the past. I've seen it with I don't want to sound like an old codger, but I can remember, Sun Microsystems. Remember Sun Microsystems? I can remember back in the 90s I used to go, I spent a lot of time in hospitals, right? And I'd be coming in the back. And I was going into the Florida hospitals in Orlando. And on the back loading dock, they had stacks and stacks and stacks of these computer boxes. They were thin. They were servers. And they all said Sun Microsystems. And I'm like, wow, what do you guys, and I'm like, what are you guys doing? They go, we're buying these servers. We got to have them. It's the internet. We're getting paperless. We got to have all these servers. I'm like, oh, wow. Later that day, I get home. I do my can slim. I look at the charts. I'm like, I got to get some of this shit. And it was like, I don't know, $20, $30 a share. It wasn't much. And Sun Microsystems ran and ran and ran. It was a great trade, right? It turned out, I made a hell of a lot more money on Sun Micro than I did, that sales day. And a ton. And I had it for a few years. But ultimately, Sun Micro, their earnings started to falter. And this was an investment. Their earnings started to falter. And hey, we got to get out of here. Sun Micro, if you read the stories, the CEO is a great guy. There's a guy by the name of Jim McNeely, and even he knew. He said they had bid the price of the stock up so high that there was no way they could keep pace. And a lot of these people, a lot of the tech people, and a lot of the great people that they have as employees, they will only work for these companies provided they can get stock options that they can cash in. And if the stock isn't doing well, then the options. So in any case, Sun Micro did a round trip. I think it went all the way down to like $2 a share and then got bought by somebody. And that was the end of Sun Micro. Can it happen to NVIDIA? Yeah, it can. Will it? I don't know. I don't know. But it can. You know, Microsoft seems to have been impervious to a lot of this. But, so maybe not them, but it can. We'll be here, everybody, and so you're gonna see a little more action here, and we're gonna keep it here. We will educate our annual members if we get things turned around and this starts performing. The education that we glean from this, when we do this, we will educate our annual members to what we did and why and what the result is. But one day doesn't make a trader. One day doesn't make a strategy. Got to be able to do it over and over and over again. Good luck, everybody. Good morning, everybody. Good afternoon, depending upon where you are. The strategy is firing more, right? Um, I have quickened the pace, right? And so far, so good. And now, what we wanted to see happen is we want to see ourselves get back to par. We want to get back to our beginning balance, right? I'm not making any decisions to enter. I'm not making any decisions to exit. And I'm certainly not doing it based on the money. Finally mastered my first. This is Wilson Bates. I'll read that in a minute. Thank you. So we're gonna let you watch and let it play out. Let me just comment. We're not trading Swing Machine, but we keep Swing Machine up, and I think you'd like to have it up too. No matter what you're doing, the idea behind Swing Machine, how it first came about, was when I was teaching Susan back years ago. This is crazy, right? I'd be going off, like I'd be in my scrubs going to work, whatever, and Susie would be trading, and I'd be like, "Okay, Susie, you got to pay attention to this. You got to pay attention to that. You got to pay attention to this. You got to pay attention to that." I'm like, "Oh God, that's not fair. What am I doing to this poor girl?" Right? So I had it in my mind's eye that I needed to build a tool whereby Susan could come in, who's really not that, which is a good thing, right? She's not really that interested in economics. She's not really that interested in the nuts and bolts of trading. What she is interested in is making money. I'm being truthful. I just am, right? So I'm like, how are we going to do this? And so I started looking around, and I don't want to knock any of these other companies. I don't, right? But I've seen them all. There was something before called CyberTrader. This goes back like 25 years. And some of them are the same pieces of shit that they were back then too, just repackaged. But they were toys. But TradeStation was very, very different. And they had something that nobody else had. And that was this radar screen, right? Now, other people got scanners, and you got to push a button, and it'll scan this and scan that. They're static. This bitch is doing it tick for tick on several different markets. You can do it on hundreds of markets. Super powerful, super good. So it can tell. So Susan could come in. You could come in, and let me share with you what you could do. The VIX. Right? Don't have enough time to explain the VIX. But the VIX goes long on Swing Machine at what time? 10:15. 10:15. That is a warning to our members that the market might turn down. Because what they're doing is they're betting futures contracts on what the option market is doing. Are they buying puts or are they buying calls? At the 5-minute ES, the 5-minute ES goes short at 10:35. Right? Now, I'm not suggesting that you should do this or shouldn't do that. I'm just pointing this out, right? And Swing Machine gets trades wrong. He absolutely does, or she. But it's a management tool. The NQ, it goes short at what time? 10:20, 5 minutes after the VIX. Right? Which is kind of good because I like the VIX to go first. Sometimes the VIX reacts to the selling. If you had taken that with a mini, yes, you're up $900. If you had done it with a micro, you're up 90. If you had done it with 10 minis, yeah, you're up 10 grand. The Dow is dipping. And that was at 305. That went long at 305 this morning. All these things went long on the European money. And now Wall Street's taking it away from them. That's how that goes. This is a game of, fuck. I mean, it just is. Excuse the French, but it's a money extraction game all over the world. That's what it is. Anyone else saying anything different is full of crap. It's a money extraction game. And we just don't want them extracting it from us. We want to do the extracting. So, any case, we'll see how this plays out, right? We'll see how this plays out. If the money flows a different direction, starts flowing in, Swing Machine will get it. Rob is in his, will be his third day today. We haven't even got yet to Swing Machine. We will be in servicing him on how to use Swing Machine. And then we will be sending him Swing Machine. But we're still getting there because there are some trading concepts that we have to have a discussion about. And in any case, so when a person's in Q school, it's a graduated trading method, right? All right, so let me read Wilson's comment. Finally mastered my first robust trading strategy. Profit factor typically exceeds 4. A shame I will deploy the gains on a return to university due to parents' fervent insistence on education. A shame I will deploy the gain. I will deploy the gains on a return. Um, well, Wilson, you got to listen to your parents, right? And you got to listen to your aunts and uncles, and you got to listen to people that go there before. If you're fortunate enough to get into a university, and you're getting a real degree, you got to focus on that first, first and foremost, and it's no reason why you still can't be. But you've got to have, this is just like golf. It's not a poor man's game. You've got to have time. You've got to have capital. You got to have risk capital too, right? So, but you're in a good position. If you have a strategy, okay, that is generating a 4.0, profit factor, that is certainly very good, right? We have strategies we're happy if they're 1.3, 1.5, right? So that is very good. But you've got to be able to go through the testing of that and how to do that in a live environment and be able to duplicate that over time. So listen to your parents, get the degree, get the education, so that you're in a position to accumulate assets and then you grow those assets, right? And we discussed the other day with Rob. It was done for me and Susan back many years ago, right? So I understand the rush. I understand the urgency. When Susan and I got started, Susan and I have been together when we were 17, right? I think Susan had just turned 18 and I was 17. We had just met at college. When we got started in Miami, we had everything that we had. I had a car called a Chevette. Susie had her old grandmother's car. I think it was like 1965 or something. And we had a dinette set, important. We had a bedroom set, and I made a TV stand that could hold a little Sony, and I won the TV. I won it in a sales contest. I worked my little ass for on it. I worked for my first company that I worked for was National Cash Register, and I worked my ass off to win that thing because we didn't have a TV. And it was a 3-month contest in the fourth quarter, and I won it. I would still have it. It was an 8-inch color TV. So I built this huge I shit you not. We got pictures of this. I built this huge entertainment center. And there was this little TV sitting on it. We still got it. I should take a picture of it. It's a hoot. I wanted to sell it in a yard sale. So it was like, no, that TV is... And to think of what I had to sell to get that, right? Rather than just go buy. But I think it probably cost the sales manager, he was a good guy, it probably cost him like $350 or something back in the day. No internet or anything of that sort. But in any case, I tell the story because the first year, I opened up IRA accounts and I started buying stock. like with $500. Susan's like, Donnie, what are we doing? Oh, Donnie, we don't have. We're sitting on beanbags. We were. We had beanbags to watch the little TV. And she's like, why did you open up IRA? I don't even know what an IRA account is. It's an individual retirement account, Susie. Okay. And what did you put the $500 in? Into stock. Why would we do that, Donnie? We can't eat stock. I explained to Susan then. I said, Susie, we are going to have a great life. And knock on wood, we have. We've had a great life. It's still a great life. I mean, it's fun. We've had a great time. But I said to her what I said to her in college, right? Our freshman year. We okay there, Teddy? Hold on a second. I gotta check on the dog. Oh, cry there. Okay, the dog's probably crying because the dog's probably heard the story like 100 times before. Like, oh no, not that story again. So I tell the story because people coming by don't know who we are, don't know what we're about, where this all came from, whatever. But the story that I share is I told Susan, we are going to be independent. Independent. We are going to do what we want to do when we want to do it, more or less, right? I may not get that yacht off of Monte Carlo. Been to Monte Carlo, by the way. We've stayed at Hotel de Paris. We have. But I never got the yacht. And that's okay. Right. Probably had some shots at it. Probably did. Probably did. So, when you get to this stage, it's amazing. The little twists, the little turns, the little somethings that, if you'd done this way, that way, heard this guy, that guy, it could be radically different. And maybe that's your day today, Wilson. In that I think you should listen to your parents. They've been down this road. I do. And when I was a young person, I'm older now, but when I was a young person, I used to ask my aunts and uncles and brothers and sisters, and I used to ask them shit because I just figured they were older than me and they had gone through it before. Now, I may not have taken, all the advice. Some of it I may have ditched, but I asked. I asked, right? So, in any case, but that's kind of where we started. I don't know how we get down that road, but but we were talking about the financial pyramid. So this is crazy story too. Our first year, we got nothing, right? We got nothing, but we got two incomes now. We got to pay taxes. So I'm like, oh well, we need an accountant for what? Right? It was nothing we were making. So I look up in the yellow pages. Kids today don't even know what the yellow pages is. And I knew that in Brickell Avenue, because I used to call on Brickell Avenue, there were these big tall buildings with all these accountants in there. But I knew we didn't have enough assets to hire one of those guys. But I looked up when we got home in our apartment, the accounting companies on Brickell Avenue. Because I didn't want an accounting company on Coral Way or Bird Road. I wanted it Brickell Avenue. Because those accountants that work on Brickell Avenue got to be really, really smart. So I called up and I got the receptionist and I said, look, I need somebody to do my taxes, but I'm not yet, multimillionaire. And do you have an accountant in your firm that moonlights? I figured there's got to be some of them that like to moonlight. She goes, yeah, as a matter of fact, we do. She goes, and I'm not gonna say his name, and she told me his name, and here's his number, and you can call him. Well, this guy, we went and talked to him. Now we're like in our 20s, early 20s. This guy was an old fart. He was like 30, 31, and we went to his house, and And I said, okay, this is it. And then I said, this is the plan, not just for the year, but this is our life's plan. And I said, and I don't know if we're always going to be in Miami. And he's like, well, that's okay. Wherever you go, Don, wherever your career goes, I'll be your accountant. I still have him. He's not just our accountant. He's a very trusted family friend. I have called on him many times, not just on taxes, but on other things. It's a voice of reason, you know. I don't know if we hit the mega lottery last night, but if we did, he would be the first person I call. So, but he and I pass on some of those lessons too in Q School, and he drew out for us what I drew out for Rob yesterday. Rob, if Rob is listening, that's where it comes from. A financial pyramid. It's a risk pyramid, and it's really important, Wilson. And that's why I say you listen to your parents. And part of that pyramid, that base of that pyramid, there's some really important decisions that you've got to make in life that are critical to your success going forward. And education is one of them. It's one of those things. So you got to work on that base. What you don't want to do, so you got to build this pyramid, and it's got to come up, right? And I know as a young person, everyone wants to get there tomorrow. They'd rather not, do the university thing. They'd rather not do the career thing. But you're probably going to have to do it. But what you don't want to do is get the pyramid upside down. Skip the college, take the college money, and put it into crypto, sort of thing. Now the pyramid is upside down, and you're going to get yourself in trouble. So I'm not a gambler. I'm not, but we do take risk every day, right? We are managing risk. You can't trade without risk. You can't do it. There's no cornering the market, and you can't do it without risk. And but you got to learn to manage that risk. Rob and I'm really looking forward with Rob's session today, because we're going to be going over that again. We haven't even got to the trading yet. I haven't even got there. And this is, what we're going to do today. I think it's going to be fun. And what I'm trying to do with Rob is to peel some things back, because what you can't do, and I know everyone does this, if you start making decisions, trading decisions on the money, I'm up 188. I better take that 188. I'm up 200. I better take that 200. You can do that around the edges, but if you start doing that day in, day out, they will get you. They'll get you. Can't make decisions on the money. If you make decisions on the money, it's Wall Street and Madison Avenue. They're connected at the hip. They're one and the same. Madison Avenue, Wall Street. It's the same entity. Throw DC in there too. Because if you're making decisions on the money, day in and day out, you're making decisions based on greed and fear. You may not think so. You may say, oh, he's full of shit. I can do it. No, you can't. No, you can't. They will get you, or you will get yourself in trouble. You will. And what we don't know, and what you don't know, you might, but I don't know everybody here personally, but when folks come into the Q School, I don't know how we can talk about sizing and proportion and everything, but I don't know how a person reacts to losses. See, because you can't trade without losses. But what we don't want to have is negative outliers. Big losses. None. Zero. Zero tolerance for that. Zero. There's no reason anybody should lose a big amount of money on a singular trade. Absolutely none. Especially with the computers and everything. Absolutely not. This trading strategy that's running right now has parameters already built in. That's why I can take the dogs for a walk. It's being managed for me. Um, so I can only describe that, right? And again, I kind of lost my thought where I was going here, but it is it's insidious if you're making decisions off the money. And that's why they say, in fact, I think it's probably higher. It isn't for us that 90% of the people lose. I think it's probably higher. For us, it isn't. It's very high because we go over this in great detail. But what I don't know is how a person will react and what the circumstances are. And what I mean by that is, if you are in a profession, whatever your profession is, and you're going to be very, very good, and we got all kinds of very, very successful people, very, very successful, very, very smart people, C-suite level, and all kinds of great experiences, and I learn a ton from everybody, and I learn a ton from Rob as well. Um, where I was going with this is that when you do your job, you get paid. If you don't do a good job, or you don't get the sale, or I don't know, whatever it is you're doing doesn't quite go as good as you like, or your boss likes, they don't reach into your pocket and take money out, right? They don't say like, hey, you know something? You didn't get the sale today, and you made five of them. You didn't get any of them, and I'm going to charge you. I'm going to take $500 out of your wallet. We're like, what? They don't do that. The market does. It's mean. It's a nasty, nasty place for that. Because if you get it wrong, if you get it wrong, they're going to take money out of you, and it hurts. It hurts in the beginning. It hurts. So we spend a lot of time on that in the beginning, discussing that and how we manage that and how we go about it, how we look at it, how we view. I can tell you my stories, but I share with you Logan's story. And Logan is a young person that came to us and got very successful with futures, and then took a very small amount of money, took the same approach we told him he could, and he did, and he applied it to Ethereum at the right time, at the right place when Ethereum was $20 a coin, and he is a multimillionaire. He is. Right place, right time. Some might say very lucky. I might say very lucky. But you know what? It wasn't really, because I could have done it too with him. I chose not to do it. Conscious decision. Maybe in an earlier time I would have. I don't know why I didn't. It's silly, but he did, and he got himself in that position. And we even said to Logan, Logan at the time probably was looking at, well, why didn't I buy shares of Tesla? Why didn't I do that? I'm like, Logan, there's always something. There's always something. And then he said, Don, I made like 20 grand, and I'm going to use point and figure on Ethereum. It's selling at $20 a coin. I'm going to buy 1,000 of these coins. Okay. And then, sometime later, he was telling us and letting us know what he was going on. He said, Don, he goes, you remember how nervous I was over $280, $230 trade? You remember how nervous I was, how concerned I was? I said, yes, I do. He goes, Don, in the past year, I've had trades that are six figures, and I don't even bat an eyelash. It's nothing to me, Don. It's not even as important as the $300 was. And I'm like, I know. But he learned to trade, and he learned a specific technique that we do teach using point and figure, which is great, and he married it, and he just got really, really, really good, and he understood the risk dynamics, and it really didn't matter if it was Ethereum, if it was MicroStrategy, if it just didn't even matter. We didn't even have, thank God, didn't even have a fundamental discussion about crypto or Ethereum. It was purely a trading discussion, which was be careful of the exchange. This was my advice. I don't have a problem with you doing it. Um, you can certainly take the same approach that you've been using. You could do it. You absolutely could, but just be careful as your money grows that you don't. I don't know about the exchanges in crypto, which turned out to be, true. Some of those, but he didn't get hurt in that, and he understood, and he said, "I'll pull the money out and put it into, you know, a normal brokerage over time." That makes sense. So Wilson, I think it's great that that you're doing what you're doing. I think it's great that you're in university. I'm assuming you're going into some finance classes or whatever, and you've got to you have an opportunity in those 4 years that you're there to yeah, you got to. Yeah, I got to. And those university professors challenge their ass, man. Make them work. Make them work. Whatever class it is, especially if it's around this, but really, really top them and and get out of it. So and you just do fine. Just adopt that for the rest of your life, right? So I mean, here I am. I love this shit. I love this, right? I meet new people. It's you know, we're going this way, we're going that way. We're writing our own code. We're doing our own trading. We're running Stock Market Caddy. We didn't start with Stock Market Caddy, right? Stock Market Caddy came about several years after Susan and I got started doing this type of trading, and and I'm not from Wall Street, right, or Madison Avenue. Thank God. I mean, I would have, God. If I had worked for a bank or had worked for Wall Street, I don't know. I think I'd be a dog walker or something today. I just couldn't. There isn't anybody here today that has more contempt for those assholes than me. I'm sorry. I don't like them. In a vicarious way, um, Stock Market Caddy is a way for me to get back at them. Because I love when people, bring up all the old axioms of Wall Street and all that shit, and I just love peeling it back and like just educating folks on it. And we do Stock Market Caddy. We don't advertise. We're not linked with anybody. Um, when it was never going to be thousands of people. We're not managing anyone's money. I don't have any interest in that. Um, we just like doing it. If we just had one person, we'd do it for one. Fortunately, it's grown and it makes it more interesting and more fun. So that's kind of who we are. But this little program, now all I did, this is exactly the same program, running exactly the same market, running exactly the the same leverage. All I did was speed it up. I just sped it up a little bit. Discuss it with Susan. Susan looks like, yeah, I think so, Don. I think you want to speed it up. I'm like, okay, let's do it. So, here we are. It's Wednesday, and yeah, we're down from where we were, but you know what? We got plenty of time, and we'll get rolling. Sound okay? All right. For those of you that are coming by on the CME challenge, let me just mention, I love the CME. You can register for the CME, not the challenge necessarily now. I don't know if you can or can't, but you can register at the CME for free. They're a great resource. They're a great exchange. I think they're a great company, and I think everything about them is great. These little challenges that they do, they're doing more and more frequently, so that's going to be good. I like doing them. It's a little distraction. However, they're, they've changed. They've made improvements on their trading platform. They've made it a little bit less clunky. They have. We can't automate it, right? So that's a drag for me, right? Because I can't. If I would like to just put the program on it, right? And and I haven't. I don't have the smarts to build an API for it, but so we probably could, but I haven't. Um, and but I got to tell you, I went in the other day to affect some trades, and I let him. I sent him a note, and I couldn't get in, so that kind of sucked. And so we got locked in, and so I we weren't able to to get off to a really good start. Um, I did go in though, and on Sunday night, and just got as short as I could on the Nasdaq. Why? Because it was in approaching euphoria in the VIX. The other morning when the data point come out, we could see it lighting off. I would have liked to have killed that trade, taken it up, and then got on it. But I couldn't get into the bitch. So that's why it's critically important, especially here doing what we're doing. You've got to have a platform, and they're not that's only for, like, for demo, right? That's only for for education what they're doing. So I'm not knocking that, but for your own trading, you got to have a platform that is very, very stable, very, very reliable, and it allows you to do this sort of thing. Not everyone allows you to do this, and they'll never allow you to do it. There are some countries that won't allow you to do it, right? They won't. Or you got to jump through some hoops to get it done. And there's always, so I'll leave that to others. Um, but I cannot. I mean, TradeStation's phenomenal, phenomenal, right? It's a surgical tool, and they just keep adding and adding shit. I mean, I'm working with it every single day for years. There's still so much of it that I don't know, right? So if you're a young person, Wilson, and you're able to get a TradeStation account, you want to get one I think over everybody. It's really, really phenomenal. Now, they used to be their own company. They're owned by Mitsubishi Bank out of Japan. Great acquisition. It's great. And they just keep making. We couldn't do what we're doing, and they have their own coding language. You don't have to be a coder, but we don't dissuade it. We will do the coding. We will, as you get, a member, you're like, well, what about this? What about that? Could I do this? Could I do that? Um, hey, Teddy. All right, I've got to break away. We're going to let you watch, and we're getting a nice turn down. So we look at. Hey, Ted, he keeps hitting my arm. We can't. I can't. I gotta. I want to show you. So here's the 1015, 1035. Okay, so it's 287. It's $27 with the micro. 1020, 1300. Right. The Dow now. The Dow may stay long. It's the Russell that is more of an indicator. Why would the Dow stay long while they're selling off? Because the big money, they will go into Walmart, J&J, Johnson& Johnson to hide. But they will get them all in the end. When the market's correct, they'll get them all. But initially, some of the money may flow into the big, heavy stalwarts of the Dow because it just is a safe harbor, a place to park their money to be safe, relative, right? We have a huge advantage. We just got to get in and get our share each day. These guys got to manage billions. It's no small task for them, right? It's like trying to turn, well, they can't, right? We're on little jet skis, flying around the harbor. They got aircraft carriers, with a convoy. They can't turn the aircraft carrier around in the middle of Tampa Bay. I mean, they can't even come in. It's too big. It's huge. But we can be out there in Tampa Bay on jet skis, or wave runners, and just riding around having a great time in their wake. Huge, huge advantage. Have fun. Good morning, late good morning to everybody in our market. Pausing here a little bit. She got a leg back up again? I don't know. Everyone's all excited about the interest rate. You know what? Maybe Nvidia is going to miss earnings. Maybe they're going to guide lower. The end of the month. Maybe whatever. Maybe Putin's going to tell Trump, "Hey, get lost." Not likely. Maybe that's going to be the next one that's going to push it up. We don't know. We don't know where the potholes are. We don't know how deep they are. We don't know the speed bumps. We don't know the off ramps, the on ramps, as far as the intraday. And the market doesn't even know, right? All we know is the here in the now. When we're going this way, we're going that way. When we're going, so we in Swing Machine helps us see that. The other program is doing something different with point and figure, and is trying to capture these trades, and it's doing a pretty nice job. I want to give you some stats here. So write this down. Let me see. Over the last few months, this particular strategy is telling me, let me give you a performance report. This is something we'll be doing with everybody. So it's telling me that over the last 3 months, we should have a profit factor not of 4. Sorry to say, Wilson, I wish it was 1.53. 1.53 profit factor. The win-loss ratio, which is a feel-good metric, is 44%. 44.5. So just remember that. 1.53, 44%. 1,200 some odd trades. In the backtest for the last 3 months. The net profit tells us around 97 grand. All right, so let's go look and see what it's done today. Now, there's one little one that I took, but this will be pretty close. And let's get this open. And we generate a report. Okay, well, yeah. So she's only had 3 trades, and she's won on all 3. So the way that we would have to calculate the profit factor is it's netted 790. We would have to divide 790 by 3 trades. Let's call it $10. We get a profit factor of 79. We're making $79 for every dollar expended. Well, that would work, right? But that will come back to earth. We will have some losers in here. We just haven't had any yet. So that's kind of where we be. I'm all right with that, and I like what it's doing. Any questions, let us know. And we are mechanical, algorithmic traders. That's what we are. Right? I will arm wrestle you for the right to tell you or share with you that I am the most ignorant person in the market here today. And everywhere. Every single day, I'm the most ignorant one. Out of the 2,500 that registered for the CME, I'm the most ignorant one. And coast to coast, I need to be. I'm not trying to be right. I'm not trying to prove an outcome. I'm not. I'm not going to put that kind of pressure on myself. Doesn't matter what I do anyways. It only matters what you do. But I need to be able to move left or right or left. I get out of position. I can remember when I was in Little League, I wanted to field every single ball. I wasn't that great a baseball player, but I loved the game. And I was playing second base, and the ball would get hit to right field, and I'd run out in the field and try to field it. My dad was watching like, Don, play your position, right? Don't let the right fielder play his position. Don't play, and so that you're in position. So you get impatient with the market. I've had enough of this. I haven't made any money. I'm going to I've got a $50,000 account. I'm going to put 20 grand into a call option. Okay, you might hit it. You might, and you might not. Chances are you won't. Mm. And those things hurt. It hurt really bad. And I know what that is. Been there, done that with numbers that are staggering. I survived it, but I knew enough to stop, think, look around, say, you know what, there's got to be something to this. And there is not, well, there is a holy grail, but not one that you're thinking about. There isn't one program, one anything that can trade every single market. Swing Machine certainly appears to be, right? It does a very fine job, but it doesn't, there isn't, it isn't a holy grail. But there is a holy grail, and that holy grail is you. It's you. It definitely is you. And there is trade number 4. I didn't put that in. The machine put that in. 5 micros. And the trade is long. All right, so it's cleaned up my draw for the week. Certainly enough firepower here to, and I like the fact that it's consistent with that 1 minute, swing. But we're not trading the swing. We could be, and we have it on other screens, right? We have dozens and dozens of proprietary tools and dozens of proprietary strategies. And so we would like to see this get back above par for the week and get us moving on out of here. As a trader, it's our prerogative as to when we can stop, right? Time in the market is also a risk factor, right? And the thing is, too, we're going to be discussing this with Rob in detail today. We're going to come back to it about this win-loss ratio. The reason it's not that important to me or to Susan or to our members, at least it shouldn't be, but I know it's important to everyone else because it is a feel-good metric. I won. I was right. And the thing of it is, what we'll be doing in greater detail with Rob is exposing the weakness in the win-loss ratio, and that you might have something really good, and you might be closer to turning the corner than you think. But in your pursuit to be right, in your pursuit to win, in your pursuit to feel good, you could be hurting yourself. You could be. And you just need somebody to point it out. And then you need some tools, computers. You don't even need a special program, actually. You got the tools within TradeStation to knock that out. Beat it to death. Knock it out. Get it out of your head, out of your psyche. Just get rid of it. It's when you do that, it's very, very liberating. It really is. Because then like all the shit that's swirling around us is just, it's just noise. I mean, it's interesting. I live in the real world, and, it's kind of interesting, what's going on in the Mideast and what's going on over here and what Trump is up to and with the economy and all that shit. But we don't trade any of that shit. Maybe other people are. I don't know. They probably are, subconsciously, or maybe some hedge funds, but we're not. We're not. No. Nope. The only time we might consider a fundamental analysis is if we're making an investment in a company. It will be long. It won't be short. We don't bet against the companies. We will on a trade, but not on an investment. We're going to go long. And we're going to plan on holding, and we'll reduce our leverage, and we plan on holding the stock for at least a year, ideally 2 years, 3 years, 5 years, or longer. And we will do that. We will use technical analysis, but we will also put it through a fundamental analysis that is very, very sound, and it's works, right? So we're diversified. We're not diversified in our holdings necessarily. That's not our focus. We are diversified in what we can do. So trading intraday like this, we're trading futures. We don't give a shit about anything. When we're trading options, we're using defined risk options. We're going out normally 35 to 45 days. Maybe a little bit of consideration, maybe a little bit of awareness that, yeah, we got the Jackson Hole meeting at the end of August. September is usually a nasty month. Something like that. That might be a little bit of that, but it's mostly technical. When we go out a year or longer to invest, we don't use leverage. Nope. And we don't really use options unless we're selling calls maybe against the winning position to get more income, and we use a fundamental approach as well. I hope that makes sense. The approach that we take to this all is borrowed from what I had in my mind. Was I had been spending all my time with surgeons, and in surgery, and they're actually rather boring fellows. They do this, like the guy who does the total knees, the orthopod. He does the same shit every single case. Like he doesn't like, I think we're going to go this way. I think I'm going to do it that way. You know what? I think I'm going to use this. I think I'm going to use that. I'm going to try this. I'm going to try that. No. No. They do exactly the same thing to the point where it's almost superstitious. My job was to try to change his technique one little bit to improve his speed, to improve the outcome, maybe. His speed may not be, but the patient outcome, and to make him, hopefully help him or her be more productive. That took time just to change one little aspect of it. So I always had it in my head. I was like, why aren't we, Susan, why aren't we trading and or investing with surgical precision? Why are we paying attention to all this bullshit? You know, and and when you're investing is more discretionary. And you need to have good discretionary skills. You do to be a good investor, right? And so just yesterday we were peeling that part of the onion back for Rob. But that's going to take time. That's going to take years. That's going to take a lifetime. Always be doing it. You'll be doing it when you're 90, Why not? Discretionary. But there's a lot of really good discretionary investors, and they quit their job or they retire. They've made a ton of money, and then they say, you know what, I'm going to do the same thing intraday. How hard can that be? It's a different animal. It's a much different animal. And you can't be a discretionary trader intraday. You got to go mechanical, and you got to be good mechanics, and then you got to go robotic, we believe, and then you got to become a hedger, robotic hedger. You really got to push these tools. I'm Bag of Dawn, the Stock Market Caddy. I've got to break away. We're going to let you watch. All these trades that are going in and out right now are being done by a machine. We'll see. We want to see if this, would like to see. I don't know what the outcome's going to be. Market's going to do what market's going to do. But hopefully she can get us back above par where we started on Sunday night. And I did make a decision to speed it up a little bit. It may be the right decision, maybe the wrong decision, but we'll see. Impatience is sinful, where sinning is always self-detrimental. Sinning is guaranteed negative. Well, there's a lot of words there, but you gotta be patient. However, I'll just say this: when the trade is wrong, and this is where Swing Machine will really come into play. Swing Machine can help you stay out of a market, just like stay out of it when you know what to look for and what it's telling us. Stay out. Like right now, it's gotten really choppy here, but the program is doing something else. So, but it's gotten really choppy. You can just tell by looking at it, and um, and it can help you. It can help you stay out. Um, it can certainly help you get in. It can help you get out, but it can also help you stay in. Stay in. Um, what you don't want to do, and also Swing Machine has no ego, none. It doesn't really give a think what I think of it or what you think of it or anything else. They're like, you know what? If I want to get out, I'm getting out. So you don't. There's an old saying: you don't want to stay wrong for long. And we'll be discussing this too. It's the loss side of the equation, the loss side, and not the profit side necessarily, that gets people upside down, inside out. And we're going to spend some time, Rob and I, um, exploring that. And I'm actually going to use Grok on Twitter. I'm going to feed some questions right in front of Rob into Grok, and he's going to do the math for us. I used to have a radar to show the math, but we can just punch it right into Grok, and Grok is their AI tool, and it'll spit out the math, and then we're actually going to do some stuff and see it for ourselves as we go. Right? This is incremental. Okay, kids, we're going to let you watch. Now, the machine took a loss there. I don't know if you saw it or not. It took a loss of about $300 and it went short. Did not hesitate. Didn't ask me for permission. She already had permission. We'll see how she does. Now, could we be intervening, and taking some profits? We could be, but quite frankly, I think I would be hurting it. And I'd rather not. But you could, right? You could be doing that sort of thing. We'll let her run. I'm Bagged On. This is Stock Market Caddy. We are mechanical, algorithmic traders. We trade multiple markets, multiple strategies, multiple approaches, and it's all about learning to trade your game. I don't manage anyone's money. I don't make specific recommendations to buy or sell anything. Happy to discuss, the politics of the day and the economics of the day and all that. Happy to do that. And if you are honest with yourself, which I try to be, I could make a case that this market is never going to come down, and the Nasdaq is going to 50,000, the Dow's going to 100,000, Bitcoin's going to 1,000,000. I could do that. I could also make a case that Bitcoin's going to $100 and, this thing's coming down 80, 90%. I go either way. That's just an opinion, right? And I don't invest, and I don't trade on my own opinion. So why the hell would I trade on anyone else's opinion? Or even look for it? I don't even bother. So the motto of Stock Market Caddy is learn to trade your game. Your game. And to develop your game. If you invest in the golf clubs, the golf cart, the shoes, the pants, the naked lady tees, right? You got it all. Do you want to hit the shots? Or do you want the guy who just happens to be riding beside you, Carl, the landscape guy, the maintenance man? Do you want him, or you want him hitting the shots? I think I would rather play my own game, right? But that is rare, right? Most people at this, they don't want to be bothered. They don't. They don't want to think about their money. They want their money to work for them, whatever that means. I want my money to work for me. But they don't want to work at it. And then they're going to go find that boutique broker down the street. That boutique, oh, he's a special guy. That guy, whoo, man, can he pick him? Or that stock guru guy. I'm not a guru. I'm not the boutique broker or broker. No. Nope, I don't employ any of them either. I've been down that road. I've had my share of that. No thanks. None other than Rush Limbaugh. Rush Limbaugh used to say, you can probably Google this and find it in the Wayback Machine. There's a machine that they call the Wayback. And he said, why in the world, if I've been in a position through my own skill set to earn and save millions and millions of dollars, why the hell do I want to turn that over to, some 25-year-old kid? Nothing against being 25, but why would I want to do that? Or with government sacks, why would I do that? And Rush, like him, I hate him, and I love the guy. Had an abundance of common sense, and that always stuck with me. I had a chance to speak with him a couple times too. I did get through. I used to call the Rush Limbaugh. I got it on audio tape someplace. Anywho, I think I was bitching about the markets too. Rigged. Money printing. Back in the day, it was going on. It's been going on. It's been going on our entire lives since the founding of the Federal Reserve, the central bank, really since 1913. So. Now, one of the other things that you can do as a mechanical algorithmic trader, right? You can certainly intervene and you can take ideally the profit. I'd rather you not messing with the stop loss, trying to get cute. I'd rather you not. I'm somewhat okay if you decide to take the profit every time. I'm okay with it. Rather you kind of let it go. But one of the things that you can do too is you can set break-even stops, and you can actually turn the algorithm off, right? So I know where the profit target is on this. It has a profit target. It has a number of them, and I know where they are. They're up around $1,000. Let's say the bottom falls out of this thing, and the market starts really melting. It isn't against the rules. It isn't. It's okay. I can decide as the pilot of my plane to do what? I could say, you know what? I'm going to turn the strategy off. And I'm going to set, using other tools, a break-even stop. So I could be up like $600-700, but it's accelerating. I can see the acceleration of the market down, and I can see my account rising. And I could go in. I could even do it now. And I could set a break even whereby if it comes back and I only make $5, I only make $5. But if it continues to melt and we catch a market sell-off this afternoon, we might, we may not. It might run up 1,000, 2,000, 3,000, 5,000. It might. What would that be? That would be a positive outlier. Now, we're teaching folks how to get those, how to get in position for those. You're not going to get them every day. You're not. Probably not, right? Probably. You're not going to, how do I put this? If you were trading the NASDAQ, though, I mean, the probability of not getting one, the probability of getting, you're going to get a number of them. If you're doing this, quite a bit, right? You're doing it, quite a few hours. If you're only an hour a day, and maybe not. But if you're doing this all day, every day, there's no question you're going to have an opportunity to get them, probably a few of them every week. Every week. Every damn week. And it's an outlier. And you have to know that. You have to say, it's not because I'm the smartest guy here and I was listening to Jim Cramer and David Faber and they said this and that about the interest rate and I went long and I made a ton of money and I'm wicked smart. I know you guys aren't being facetious, right? But, and I'm going to listen to David Faber again. Next time he's going to help me do it again. No, that ain't going to happen. No, that may have happened once, but, even a stop clock, right? But it ain't going to happen again. It's not going to happen enough. But you put these programs on. Now, I'm not going to do that here, right? I'm going to choose not to do it. My instincts are telling me that maybe I should, right? What do you think? Do you think I should do it? There's 5 people here. Anybody got a thought? You want me to do it? You want me to set a break even and let the bitch run? Looks kind of nasty to me. We got 1240, we got the VIX up, we got the ES. We could, right? The only issue there is then I don't, I'm going to be tied up for a couple of hours, and I don't like tossing in the towel on a program, even for a few hours. Sometimes, right? It depends. So I probably won't do it. I won't do it, but I could, right? And you could do the same thing. And you know what's going to happen when you do it? Probably the first 10 times in a row, the bitch is going to come back and stop you out for $5. That's probably what's going to happen. And you guys say, man, that sucks. If you can't watch it, trailing stop, exactly. Yeah, you could. We're going to do that, Rob. Yep, absolutely. There's a lot of different, you could trail percentages, you could trail money. We can trail other things on other charts. We can trail the number of closes, to kind of reduce it. Susie loves to use trailers. I'm a little less apt to use them, but I use them maybe in a little different way. But you could, you absolutely could. And so what happens is you have like 10 in a row where you set a break even like this, comes back and you make $5. Oh man, that guy, I could have had. Well, and the thing is, this is all personal, right? You're gonna have your own personal um, trading personality. If this had run up as it did, $400 or $500, and I think we get up there, and it comes back and it only makes five. If that's Susan, that actually bothers her. I mean, it bothers her. It does. It doesn't bother me. Partly because she's trading too, and I know that she will get them. Right? She'll get those. So as a result of that, Susan will have a lot of ground balls. She will, and she may not get as many positive outliers, and that's okay. It's okay, right? She's okay, doing her thing, but she's not doing it all day, every day either, right? She isn't, and she's not here right now. So, um, but I'll do it, and it may happen like 10 times in a row. We're up three, four, $500, and it comes back and I make $5. So, now I got to wait for the next trade, and I do it again. Same thing, same thing, same thing. But I just know, I've done it so many times, that invariably I will get one. I will get one. I'll get at least one or two, maybe a few more during the course of a week. And you get that positive outlier that covers. And when you get that positive outlier, it covers up a whole lot of sins, right? But what we can't have negative outliers. Can't have them. You can't be on a boat, or for instance, like if you got a boat, you're on a big boat, big yacht maybe, and or military ship or something, and you take it on some water, right? And you're bailing the water, and you're bailing it, and you're bailing it, and you're bailing it, and things are going well. You're getting the water off the boat, and you're like, okay, well, we're riding high now, and you decide, I'm gonna fire one of those torpedoes. I don't know, make up an analogy, and you fire that torpedo. Only thing is, she doesn't launch, and the bitch blows the front of the bow of the ship off. Well, guess what? You're going to sink. I don't care how much bailing you did. I don't care how successful bailing you were earlier. You're going to sink. We don't want anyone sinking. We don't want anyone firing a torpedo. Don't do that. You know when you're doing it. I don't care if you got $5,000, $10,000, $50,000, $100,000, $500,000 or more. You can fire a torpedo. Big ones, real big ones. Yeah, and you can make a ton of money if it launches and sinks the other ship, right? Yeah, you can, and feel real good about it. But if that bitch goes off in the hull, so you're either going not to do it or you're going to do it. Some people do it over and over again, and then that gets into a realm that I can't help. I can only make one aware, because then that's a psychological thing. I'll have folks sometimes say to me, they'll call and they'll say, I want to make $10,000 a month. Yeah, okay, it's admirable. Admirable. And I'll be like, well, can you lose 10,000 in a month? Now that would be kind of hard to do in the way that we trade, because you'd have to lose every single trade. But could you lose 10,000? Oh, hell no, Don. No. Well, how much could you lose? Oh, I haven't thought about that. I don't want to lose it all. Well, that's not realistic. Can you lose $5,000? No, Don. I can't lose $5,000 because I only got $5,000. I'm like, oh, wait a minute. You can't make $10,000 with $5,000 every month in, month out. Now you can get lucky on an option, one or two, and you can make 50 grand. You can, and that does happen. But that would also be a positive outlier. And some people hit them on the first time. Most don't. And I kind of feel bad for the ones that hit it on the first time because then they think that's then they never learn. The folks who get hurt, those are the ones that'll learn, and then they won't do it again, and they'll learn the craft. That makes sense. um, I gotta run, Rob. I'm gonna come meet up with you. We're gonna have some fun. We're gonna let everyone watch. I'm not going to override the program. I'm going to let the program run. She's got all sorts of breaks, all sorts of parameters on it. I'm okay. I'll have visibility on it. The only thing that could hurt me right now is, if I was to lose power. We got backups for that sort of thing too. So, all right, everybody, we'll let you watch. Good afternoon, everyone. And the market's just not doing much of anything in a really, really tight range here. So it didn't help us at all. It didn't really hurt us. We're fine. Um, at We'll wait your watch right up until about 4:15, and then at that time we'll shut down and try to punch up maybe sometime tomorrow. We'll take a look at the strategy, see what's happening. Just not a whole lot, right? Um, yeah, no, it's not a lot. Yeah, we had some opportunities. Yeah, a couple of whipsaws. That's unavoidable. 47. Yep. Okay. If anybody has any questions, let us know, and we hope you had a good day. They're still buying the small caps, so they got an appetite for risk. Okay, folks, we're going to say thank you for stopping by. We'll try to punch up either a little bit later or certainly tomorrow. We're going to stay with the settings that we got. We're down 2 points for the week. Not great, but we'll see. We'll keep you posted, and we wish everyone the best.